Bitcoin did it. Ethereum did it. Now Hbar has just joined the ETF club. Today's not just another crypto announcement. No, the spot Hbar ETF, ticker HBR, is live, and that means a shift in how the asset Hbar trades, who holds it, and how institutional money can access it. Here's what that means for Hbar as an asset. First, liquidity and access with an ETF backed by Hbar tokens held in custody. Traditional investors, pension funds, mutual funds, brokers can get exposure now without having to self-custody. That opens up a new pool of capital, and analysts believe that even modest institutional flows could disproportionately impact Hbar's price given its smaller market cap compared to Bitcoin and Ethereum. Well, yeah, if you watched an earlier video that I did, there's over 70 trillion liquid dollars sitting in retail investments in the United States that could be moved today. And with lots of companies suggesting 2 to 5% in your portfolio of crypto assets, this is crazy. 5% of that goes into crypto. That's almost $4 trillion. You know, even if we get, imagine Hbar gets $1 trillion right now at an $8 billion market cap. That is insane. I'm not saying that it will. It will not for a very long time if it's even possible. This is not financial advice, but imagine that. So the ETF's prospectus states it will hold Hbar tokens and mirror the Hbar price benchmark, the CoinDesk Hbar USD index, less expenses. Custody is handled by top-tier firms, so the marketplace begins treating Hbar more like an institutional-grade asset rather than a speculative coin. So, third thing, token economics and supply dynamics. As of early 2025, the governing council of the underlying network held over 21% of total supply in treasury/unreleased form. When an ETF is in place, holders of large supply may feel additional pressure or incentive to release or sell, so supply unlocks become a bigger factor. Conversely, if the ETF draws strong, Hbar may see reduced free float as tokens are locked in the fund's custody, tightening supply and potentially supporting a higher price. But this is an important thing. There are risks. Price may run ahead of fundamentals after the initial ETF listing hype. The token may correct as traders take profits. Past crypto ETF launches have shown a pattern of this, where they start off, it's like boom, 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 crazy, but then it drops off quite a bit. But then over the next 6 to 12 months, you start seeing a lot more steady growth, not just the FOMO, if you would call it that. And another risk is as Hbar becomes part of mainstream products, its price may also become more correlated with general market/ETF flows rather than pure blockchain fundamentals. So we might all have to get away from our, us thinking there's some 4-year cycle in the crypto market.